Okay. So first, thanks for everyone for joining us tonight. Yeah, it's obviously been a chaotic few weeks to say the least. And whilst I'm getting sick of hearing the words unprecedented and uncharted, we're definitely living in a time period that I think none of us will soon forget, and that's going to be life-changing in one way or another for all of us. So with the government looking to support businesses and individuals in what they are calling building a bridge to the other side of this, we really thought it was important to go through the main stimulus packages in a bit of detail. It's been a bit scattergun how they've come out, and yeah, there's been lots of different releases, so there is a fair bit of confusion around. So I guess today we're really just trying to provide a bit of clarity and direction. We might not have all the answers, but yeah, we're really going to just give you that direction of what you should be looking into and what you may be eligible for. So today I'm joined with two of my colleagues, so Jess and Larry, and also we've got Cam from Shape HR joining us as well, which is great to sort of go over that employee-employer type issues. So just firstly, before we get into anything, I just wanted to quickly go through a quick disclaimer. So Scott's Chartered Accountants and Shape HR are not able to provide legal advice as we are not a legal firm. The information contained in this webinar is general advice only, and if you have questions specific to your company or situation, you should seek specific advice. So moving into the agenda, we do have a lot of content which you'll see to go through tonight. Each topic we will try to answer the most common questions we've received throughout the past few weeks. Then we'll also, as I mentioned, have a Q&A with Cam to go through the main questions we've had from clients in relation to HR. I'll then finish with going over the current situation in relation to commercial rent. So I think the National Cabinet are meeting again on this tomorrow. We haven't really been given any clear direction on this. I think they are struggling to come up with a solution for this, but we've tried to at least get something practical together to get through to you guys. So moving into the first supplement item, and that is the aptly named coronavirus supplement. So this was the first announcement that came out, and what this is that the new coronavirus supplement at the rate of $550 per fortnight will be paid to individuals who are currently eligible for certain income support payments. These payments include the job seeker payment, the youth allowance payment, and the parenting payment, and that's both the partnered and the single payment. So this $550 fortnightly payment is paid in addition to the existing income support payment. The job seeker payment amount depends on variables such as if you're single, have a dependent child, or a partner. So the amounts for the original job seeker payment usually range between, say, $510 to around $612. So the coronavirus supplement will be added on top of that. So the fortnightly payment you're looking at is going to be around that $1,100 mark. So the next thing is that they're really going to open up and expand people to be able to access this payment who previously wouldn't have been able to. So with large-scale unemployment expected, the government has expanded access to certain income support payments, and the most notable one in that is the job seeker payment. So according to the government, individuals who may now be eligible for this include permanent employees who are stood down or lose their employment, sole traders, the self-employed, casual workers, and contract workers who meet the income test. So asset testing, which has been previously done on the job seeker payment, has been waived entirely, and the income testing for the job seeker payment has been relaxed to now allow an eligible person to receive this payment as long as their partner is earning less than $3,068 a fortnight. So that's an annual income of around $80,000. So one of the main questions we've had the last few weeks is, how do I apply for this? And yeah, it is important to note that the government want you applying for this payment online through MyGov as opposed to going to Centrelink. I think we all probably saw those saddening images a few weeks ago with the lines at Centrelink. They were pretty hard to watch. So that, yeah, the government really don't want that happening, and they want you to be going onto MyGov and lodging an intent to claim. So creating a MyGov account is vital at the moment for probably everyone, I think. So getting that connected to Centrelink, the ATO, going through that process is really important at the moment. once you create this, if the job seeker is something you're looking to apply for, you can lodge what's called an intent to claim. Then Centrelink will get in touch with you in due course and go through the process. But as long as you've lodged that intent to claim, they will backdate anything, even if they do take a while for the payments to start. With the coronavirus supplement, that is going to be automatically added to the payment for a 6-month period, and that starts on April 27th. So the other thing, wanted to mention with these tax-free payments is the tax-free payments of $750 to eligible recipients. So this is a cash in hand type stimulus boost, similar to what we've seen other governments apply in the past. So the Morrison government have made 2 rounds of $750 payments available for eligible recipients. So the first $750 payment will be available to individuals who are residing in Australia and are receiving an eligible government payment, or are the holders of an eligible concession card at any time from 12th of March to 13th of April. Also, where an individual has lodged a claim for one of the eligible payments or concession cards at any time between those 2 dates, they will also receive the payment as long as their claim's obviously been granted. The second payment will be available to individuals who are residing in Australia and are still receiving that same payment at the 10th of July 2020. If you're receiving an income support payment that qualifies you to get the fortnightly coronavirus supplement, you will not get the second payment. This payment will be made automatically to any eligible individuals from the 13th of July 2020. And please note that an individual can be eligible to receive both the first and second support payment. However, they can only receive one version of the $750 payments on both hits. So what that means is that you might receive multiple payments that are listed on the screen here, but you can only receive $750 first up and then the other $750 on the 13th of July. The list of eligible payments is on screen. I won't run through them, but please hopefully have a quick look at it now. And if you do have any questions on any of it, please don't hesitate to reach out and I can make sure, if you are eligible, you're going to get that lump sum payment. So I'll now move on to early access to superannuation, which is, again, has been a massive talking point throughout our client bases these last few weeks. So with as part of the stimulus offering, the government are going to introduce a new compassionate ground of release that will allow individuals to access the superannuation entitlements where those benefits are required to assist them to deal with the adverse economic effects this coronavirus has had on us. So to meet these new conditions, you need to be able to satisfy one or more of the following requirements. So requirement A is the individual is unemployed. Requirement B would be the individual is eligible to receive the job seeker payment, youth allowance for job seekers, parenting payment, special benefit, or farm household allowance. And then the third allowance is that if you're an individual that was made redundant or your working hours were reduced by at least 20%, you're going to be eligible to claim. And if you are a sole trader and your business was suspended or there's a reduction in turnover of 20%, you're going to be eligible as well. So you just need to meet one of those criteria and you're going to be able to access your superannuation early. So what this means is under this new compassionate grounds of release, eligible individuals will be able to access a lump sum of up to $10,000 of their superannuation entitlements before 1st of July 2020 and a further $10,000 after the 1st of July 2020. Eligible individuals who are looking to access the superannuation entitlements under the above new grounds of release will be able to apply directly to the ATO through the MyGov website as well. And to certify the above eligibility criteria is satisfied, an individual will be able to apply for an early release of their superannuation entitlements from the middle of April 2020. But again, at the moment, you can still lodge an intent or interest that you do want to make this claim down the track. So note that any application may be made after the end, like no application can be made after the end of this 6-month period. So yes, you can still apply after 1st of July, but once the 6-month period of this coronavirus supplement period ends, you're not going to be able to apply for it after, say, in December later this year. So I guess the feedback we've had from clients, we've found that most people are reluctant to take money out of their superannuation fund, which is understandable. But that said, we are in a period of survival. So if these lump sums can provide you with the safety net you need to get through these testing times, I do personally believe it is something you should consider. Even, for example, if you withdraw the amounts, sit them in your mortgage offset account, don't draw on them for one reason or other, then you can put them back in and still claim the tax deduction. I'll mention again in my next section, cash is king during these times. So it is, you know, a potential safety net there for you to be able to draw on when and if needed. So probably the final thing though to bear in mind with this is that if you do take out $5,000 before July 1, you can't then take out $15,000 after July 1. It's a maximum of $10,000 at both time periods. So yeah, if you don't take out $10,000 before July 1, you're not going to be able to catch up any amount you didn't take out after July 1. And also be careful with insurances. So a lot of super funds do have a minimum balance requirement. So if you have insurances inside a superannuation, just be mindful of the minimum balances and that they're not going to actually, you know, cancel the fund and potentially some insurances you do want to keep. So that's, again, things we can help you through before you do make the final decision on that. And just the final thing I wanted to go over before I hand over to Larry, who'll go through the cash booster payment, is just in regards to the banks. So we recommend all clients at the moment contact their bank or loan broker in regard to their existing lending facilities. Most lenders are offering to discount interest rates on the existing facilities. And once you've negotiated a better interest rate, you should then consider requesting repayment deferrals for up to 6 months. Cash, as I said, is the most important thing to get your business through this time period. Deferring your loan repayments helps your cash flow. How each bank is dealing with these deferrals isn't entirely clear at this point, but the normal way is that the repayments are deferred for up to 6 months, and at the end of the 6-month term, the loan will be extended. So the future repayment amounts should be similar to the current repayment amounts that you're paying. Depending upon your current financials, it might also be a good time to refinance to a different bank, as the banks are very keen with their interest rates, and some banks have been offering cash incentives of up to $4,000 to change. As part of the government stimulus package as well, banks will also shortly announce details of government-backed loans of up to $250,000. To be honest, we are a bit skeptical about how easy it will be to obtain these loans, but it's definitely an option that should be explored, or at least in the back of your mind to consider. A word of warning on this though is that with the loan term being 3 years and an option of no repayments for 6 months, at the conclusion of 6 months, the loan must then be repaid, obviously over a 2.5-year period. To put some numbers on that, this would mean that on a $250,000 loan, repayments after 6 months would be around $9,000 a month. So that's pretty hefty, and you don't want to get through this 6-month period and then have these massive debts that are going to be hard to sort of keep track of, because with the bounce back, you know, we don't know if it's going to just be able to roll back into business as usual. So just be wary of that. The loan process is another thing that's not entirely clear at this stage, and I think it's still working itself out, but there is a suggestion that the banks might relax the lending paperwork to be based more around business activity statements. If that's the case, there is a chance that these type of loans will be fast-tracked and able to be delivered upon a lot quicker than the banks have been giving out small business loans in the past. So I think it's still early days on all of this, but opening up these discussions with the banks is vital, even if it is just to get a better interest rate. I've tried to go through this process personally, just so I had some detail with my experience to give you guys tonight. So I've got an owner-occupied property that I've now fixed with ANZ at a rate of 2.19%, which is a pretty amazing rate, really. And also with my investment loan, I've looked to defer that for a 6-month period. With that, they've said, because they're overwhelmed at the moment, both on the phone and in the branch, to lodge that online, but you can manually stop the payments, and even if they don't process your request until after that payment's due, you're not going to be hit with any adverse fees with missed payments, that type of thing. So something to keep in mind, and as I said, it's something I've just gone through recently as well. So I'll now hand over to Larry, who will take you through the cash flow booster section.
Yeah, thanks, Chris. So my topic is the cash flow booster, which was one of the first announcements that came out when the government provided their stimulus package. So the cash flow boost, as the government's called it, relates to small and medium-sized businesses and also not-for-profits who have an annual turnover of less than 50 million. So that's pretty much most of our clients, and that employ people. And if you do that, you're eligible to receive a total payment of up to $100,000. So there is a minimum of 20,000 as well. And these amounts are based on your pay-as-you-go withholding obligations. So as you know, when you lodge your BASs, you pay tax on the wages for your employees, and that's basically what it's based on. So to qualify for this stimulus amount, employers must be established before the 12th of March 2020. So unfortunately for businesses who don't pay wages, then they miss out on this specific measure that the government's put out. So also note with the payments that you're eligible for, it's not an actual cash refund or cash in the bank, so to speak. It's a reduction of payment on your BAS. So once you lodge your BAS, your entitlement will be worked out and it'll be applied to your BAS. And if that entitlement that's worked out, even if you get the minimum $10,000, and that puts your BAS in a refund position, then that refund can be requested as a cash refund, provided you have no other tax obligations or no other outstanding amounts. So the payment is made in 2 stages. So when they came out and announced it, it was between $10,000 minimum and a $50,000 maximum, and they effectively doubled that. So the way the payments are worked out are in 2 stages. So basically, whatever you're eligible for the first round of payments, the tax office effectively will double for the second round of payments. So the first lot of payments basically are confirmed or commence on the lodgement of your March BAS. So eligible employers that withhold pay-as-you-go withholding on their employees' salary and wages will receive a payment. It'll be a tax-free payment equal to 100% of the amount that you've withheld on your BAS. As I said before, the minimum is 10,000 and the maximum is 50,000. So even if when you lodge your BAS, there is no withholding, you may have casual workers or the like, or they don't earn enough, you'll still be entitled to the minimum $10,000, even though no withholding is effectively withheld. So the tax-free payment is calculated and paid by the tax office automatically, and it's applied as a credit to your GST account upon the lodgement of your March BAS. You will not receive this payment until the 28th of April. So even if you lodged your BAS today or you lodged it yesterday or on the 1st of April, unfortunately the payment applied won't be on there until the 28th of April. So how does it effectively work? Because we have some clients who lodge a BAS each quarter and pay wages each quarter, and some are on a monthly basis. So for quarterly lodges, the amounts will be eligible to receive the payment for the March quarter BAS and the June quarter BAS. And for monthly lodges, it's worked out on lodging your March BAS, your April activity statement, your May activity statement, and your June BAS as well. So as I said earlier, the second payment is based on the same amount you received on the first round of payments. However, it's just adjusted slightly. So employers who continue to be active will receive the second payment tax-free once they've lodged their BAS for the June, August, September, and July BASs, sorry. So it'll work this way. So for the quarterly lodgers who would have lodged the BAS for March and June, so they're eligible for 2 more payments, which will be after the lodgement of their June BAS and September BAS. And they'll get whatever they receive the first time round, they'll get 50% when the June BAS is lodged, and then the other 50 when the September BAS is lodged. So they're just splitting it up into 2 equal payments, which is based on the first round. So similar with monthly lodgers, so they're eligible to receive the additional payment or the second round payment when they lodge their June BAS, July, August, September, and their payments are split into 4 equal payments. So basically being 25% of whatever they were entitled to on the first time around. So as I said, you get a minimum 10,000 and a maximum of 50,000. So the ATO will automatically calculate and pay the amount as a credit to your GST account once you've lodged your BAS. And the payment for stage 2 is obviously based on stage 1, as I've said. So the second time around, it doesn't matter what your withholding is. It just means that, or once you lodge your BASs, that's the trigger point for you to be eligible for that. So it is a little bit confusing and probably hard to get your head around. But when we lodge the BASs, or if you lodge it yourself, definitely let us know, because we'll check it and make sure that your entitlement is calculated correctly and the payment is received correctly. So some clients who might have tax that's owing or outstanding, the payment for this pay-as-you-go withholding credit that you get will also be applied against that debt as well. So it just depends on where you're at, and if you're up to date with your BAS lodgements and your payments, that's great. But if you do have outstanding monies and this creates a refund, then that refund will be applied against other tax debts you might have. So one of the questions is that we've basically been receiving is, because some businesses don't pay wages or the business owners don't take a wage, how do we go about accessing this cash boost? So basically, tax office have come out, or the commentary around this whole stimulus measure is, if you artificially create, or if you change your payment structure, or in any way change the way you go about your business to make yourself eligible for this, then the tax office can look at that and not make a payment to you. So you just got to be careful that whatever we do it right, and we don't just do it for the purpose of getting this stimulus package, because the tax office has pretty much come out and said that they'll be looking at this very closely, and people who have artificially made up amounts or artificially changed the way they pay their employees won't receive this payment, and then obviously you'll have a black mark against you with the tax office, which is obviously what you don't want. So the second, I suppose, wage subsidy, if you want to call it, is for apprentices and trainees. And this relates, as I said, specifically to apprentices and trainees. The incentive is available to small businesses who have less than 20 employees. So that's an extra criteria that you need to satisfy. And also you need to make sure that you retain your apprentice or trainee. So your business must also have employed the apprentice or trainee at the 1st of March, and you will need to provide evidence that wages have been paid to them. The wage subsidy is equal to 50% of the apprentice or trainee's wage, and this is paid during 9 months from 1st of January this year up until the 30th of September this year. So the wage subsidy covers that 9-month period, and the total you're eligible for is $21,000 maximum, but it's also capped into 3 $7,000 quarters. So depending on payments that are made, there is that capping of $7,000 per quarter to a maximum of $21,000 for the whole 9 months. So with this one, you do need to register, and you register for this subsidy. You should be able to register now. Early April, they're saying, is the start date. And when you make a claim for the payment, the last day to make that claim is the 31st of December this year. So you do have quite some time, but obviously I'd be doing it as you go and not waiting till the end. So to access this, you need to contact your apprenticeship support network provider. They have all the details. They will assess your eligibility to make sure that you qualify for it. And if you do, then they should be able to manage the rest of the process for you. So this subsidy is done through that apprenticeship support network provider. It's separate to the tax office. Tax office stimulus payments, I suppose, that others have been eligible for. So just one question that came up earlier today, and also that we've just had a bit more clarity on, is about getting the apprenticeship rebate, and also what Jess is going to go through next being the JobKeeper payment, because there's been a bit of talk about that. There is, in some situations, there can be some overlap, but in a nutshell, you can't have a claim for both payments. One or the other must apply, so you can't sort of cash in on both. But we're waiting for further clarification on that, and we'll pass it out as details come through, but it looks like that's pretty much what it's going to be. So the next thing I'm going to talk about is the instant asset write-off for business assets. So all the measures to date, and obviously ones that we're still going to talk about, is about the government spending money to subsidise businesses to hold employees. So they've obviously spent a truckload of cash to keep people in jobs and to keep businesses afloat. Now this measure is about your business actually spending money to give yourself an immediate tax deduction. So just before I go into the nitty-gritty of how this works, we're definitely not promoting you going out spending any money that's not necessary. Preserving cash is important, cutting cost is important, because as we've been saying all along, your business does need to survive through this pandemic. But for those who must buy any assets or anything, the way that this measure works is you'll get an immediate tax deduction for any capital item purchase. So capital items can be any equipment you need for your business, any machinery, cars to a certain extent. You'll get a full tax deduction if the cost of that is less than $150,000. So it's only a short-term measure that it covers, meaning that it only goes up until the 30th of June this year. So there's only a small window of opportunity. And it's unclear if this will be extended. We'll just have to wait and see if any more news comes out about it. But at this stage, it's only up to the 30th of June. So you just also need to make sure that when you do buy equipment or machinery or a car, that you actually have that, that you've actually paid for it and received it and you're using it before the 30th of June. What won't apply is if you order something, say in that last week of June, but it doesn't come until July or August, September, it's not going to qualify. So you just need to be mindful of that end date. So some businesses may have bought assets costing more than $30,000, which was a threshold for previous years, and they may have bought that in prior years. So what we are able to do is, depending on where all your assets sit and if they're in a pool, which most of you guys are, and that pool or that collection of assets and the value, if that's less than that $150,000 at the end of this year, then we are able to write that off and give you a tax deduction in full. So you might not know the specifics of all that, but we obviously, as your accountants, we know all the details that you've got. So we'll be checking this measure, and if you do qualify for it, then that's something we'll definitely be applying for you to obviously try and help you save some tax. So just a final warning before I pass over to Jess. As I said, the $150,000 threshold doesn't apply to all cars. So the cars, there's a few more, I suppose, criteria that you need to check on that. So if you are thinking of buying a car, definitely contact us and talk to us first, so you know the full details before you go ahead, just in case you make a purchase that doesn't qualify, which is obviously not what you're wanting. So thanks for that. I'll pass you over to Jess now to go through the much talked about JobKeeper payment.
Yes, JobKeeper. So we were hoping the government would have legislated this by now. However, they have told us they are sitting again this Wednesday to do so. So we've pushed out another week. We're still in limbo with a lot of questions. However, just today actually, we have been given some further guidance from Treasury, which has reassured us somewhat for our clients' sakes. First of all, let's do a quick overview of what the JobKeeper payment is. So the JobKeeper program provides wage subsidy payments to Australian businesses who have seen their turnover reduced significantly as a result of coronavirus. Registered employers will receive a flat $1,500 each fortnight for each eligible employee, including those who have been stood down or recently rehired. Businesses will be able to claim this fortnightly payment of $1,500 per employee from 30 March, so last week, for a maximum period of 6 months. So it will go until the end of September. Payments will be backdated to the 30th of March, and they'll begin to be paid in the first week of May. It's worth noting that employers are under a legal obligation to pass these payments on to their employees. The subsidy is specifically intended to keep employees in work, not to boost the bank balances of businesses themselves. The ATO have said they're going to enforce this. So to be an eligible employer, you need to have a turnover of less than $1 billion, which I think all our clients are in this category. You need to have your turnover reduced by more than 30% relative to a comparable period a year ago. If your turnover is more than 1 billion, it's 50% reduction, but I don't think that's relevant. The employer must have been in an employment relationship with these employees as of 1st of March. So anyone who's put an employee on after 1st of March, they're not eligible to get JobKeeper payment. The employee needs to be currently employed, so you have to put them back on if you've stood them down in order to receive these payments. Not-for-profits, including charities and self-employed individuals, so businesses without employees, that meet the turnover tests are also eligible to apply for these payments. So some people say, well, how do I show this decrease of 30% in my turnover? Well, they have given us some examples. One is, for example, if you compared your revenue from March 2020 compared to March 2019, if it's decreased by 30% or more, you will be eligible to claim JobKeeper. If your business hasn't been in operation the year before, so you're a new business, or if your turnover was not representative of the usual or average turnover, so there was some changes or you had a lumpy income, the ATO does have discretion to consider this, and you can provide them additional information and reasons for it. An eligible employee, so we just went over eligible employers. An eligible employee is someone who is currently employed, as I said before, was employed as of 1st of March, is full-time, part-time, or a long-term casual. Long-term casual meaning they've been employed on a regular basis for longer than 12 months, are at least 16 years of age, are an Australian citizen or permanent visa holder, and are not in receipt of the JobKeeper payment from another employer, so you can't double dip on this one. If your employees receive the JobKeeper payment, this may affect their eligibility for payments from Centrelink, as they must report their JobKeeper payment as income. It's just like normal wages, basically. So eligible employers will have access to $150 to $1,500 fortnightly before tax payments for each full-time or part-time staff member on their books. So for employees that were already receiving this amount from their employer, then their income will not change. For employees that are receiving less than $1,500 gross per fortnight, the employer will need to top up the payment to the employee up to $1,500 before tax. So some steps and obligations for the employers. So initially, employers can register their interest in applying for JobKeeper payment via the ATO's website. Subsequently, they'll then be able to apply for the scheme via an online registration, to be announced hopefully later this week. So once you've registered your intention to apply on the ATO website, you should also now assess whether you have or will have experienced that required turnover decline of 30% or more. Another thing is, once you've registered, you need to provide that ATO information on your employees that are going to get the JobKeeper payment. This will mostly be done through the single touch payroll system. The ATO already has that data in a lot of the cases. Right now, for this month, you need to be ensuring that each employee receives at least $1,500 per fortnight before tax. For employees that are already receiving this amount from the employer, then their income will not change, as I said before, but you do need to top it up if they're receiving less. So it's up to the employer if they want to pay super on any additional wage paid because of JobKeeper payment. So for example, if you have a part-time employee who only earns $1,000 a fortnight, you only need to pay them super on $1,000 a fortnight, but they will get $1,500 gross from the JobKeeper payment. You can choose to pay super on this full amount if you wish. You will be out of pocket that. You also will need to notify your employees that they are going to receive the JobKeeper payment. All of this will hopefully be announced later this week, as I said. And then you'll be providing the information to the ATO on a monthly basis, which will all be done via the single touch payroll system as we understand it. One question we're still waiting on a definitive answer for is if the employee stood down as the business is closed and that employee is getting a $1,500 JobKeeper payment, does the employer still need to pay super on this payment? i.e. the employer is going to be out of pocket that super. We believe the answer is no, they don't, but this has not yet been confirmed. Another question we've been asked a lot is, what if you've stood down all of your employees as you've been forced to close? How are you going to pay them the $1,500 payment? Because you're still required to pay your employees $1,500 gross per fortnight, then get reimbursed from the ATO. You have to pay your employees first before you're entitled to the JobKeeper payment. How will you find the money? Treasury have suggested you ask your bank to help out. What a joke. This is unlikely to happen. If you don't have any income, the bank is not going to lend you money. The first payments from the ATO will be made in the first week of May, so a month from now. After this, they'll be made monthly in arrears. We're anxiously waiting on all of this to be confirmed, hopefully, as I said before, by the end of the week. So businesses without employees, such as the self-employed, can also register their interest for JobKeeper via the ATO's website. They'll need to give the ATO their ABN, nominate the person to receive the payment, tax file number, and provide something such like as a BAS and that sort of thing to provide proof of that you're in business. Very, very interesting, well for me it was at least anyway, and I think for our clients too, is that just today we've learned that if you operate your business as a partnership, trust, or company, you can nominate one person from the business to receive the JobKeeper payment. This is great news, as it looked like the government was forgetting about all the mum and dads in business out there with no employees who are doing all the work themselves. It is only one person you can nominate, but it is something. So what should you do right now? We would recommend all businesses go to the ATO website and register their interest to at least get the ball rolling. This doesn't mean you have to do it, but you'll get updates from the ATO and you'll have more information to make an informed choice. Watch this space. We'll keep you updated with all the information once we have it. So the Victorian Small Business Grant. I don't know if many of you have heard about this, but Victorian Government has launched a grant of $10,000 for small businesses who have been hit hardest from this crisis. Applications opened last Monday and they close on the 1st of June. To be eligible, you need to employ staff, have been subject to closure or highly impacted by the non-essential activity directions issued by the Victorian Government, have a turnover of more than $75,000, have payroll less than $650,000, have an ABN, and have had that ABN before 16th of March, and been engaged in carrying out a business on 16th of March. So businesses such as beauty salons, cafes, cinemas, gyms would all be eligible for this grant. They've all had to shut down. We've already had a couple of clients apply for the grant. The application process, or the first step of it at least, what we've got through so far, is very easy. Takes about 10 minutes. We're not sure what the steps are, as this is all new and only started last week, so who knows what further hoops the government will want you to jump through. You're not guaranteed to get the grant. There are only a certain number they are offering. I also believe for our Queensland and New South Wales people out there that those states are also offering this type of grant. Please contact us if you want some more information on this. We'll also be sending an email with some information on how to apply too. So now I will hand over to Cam Shepherd, who will give us a brief description of who he is and what he does, and then we'll fire off some questions we've been getting from our clients over these last few weeks. Over to you, Cam.
Everyone. Yeah, Cameron Shepherd here from Shape HR, and I run a HR consultancy, so human resources consultancy for small and medium-sized businesses, and based in Geelong, but have clientele up in Melbourne, down the Surf Coast, on the Bellarine Peninsula, and around the region. Ready for questions when you.
Yeah, I think
gonna-
Larry's gonna kick us.
Sorry, Cam.
No, you're right.
So yeah, Cam, so some of the questions that I've been getting is some people think they have to terminate their employees so they can access the job seeker payment. So what's the correct process to stand someone down if they intend to bring them back when, or if the business can get back up and running?
Yeah, we're seeing quite a bit of this sort of either or, so it's a terminate or it's a stand down type of arrangement, and often there are other options, obviously, but if we're looking at the job seeker eligibility for that scheme, then it's not necessary always to terminate for someone to be eligible, because it's one of the criteria that was set was a 20% reduction in someone's wage. So if, for example, someone went from working 5 days a week down to 4, because this is one of the arrangements that some of our clients have got involved with, that they may be eligible for a job seeker payment. And standing down is a different process, whereby someone's got the intention, and just getting clear on the language. I think terminate is like putting a cross through someone's name, as in entitlements need to be paid out to that employee. And then with standing down, it's the full intention that the employer is going to take them back on at whatever time it is, again, that they can operate. So the process for standing someone down ordinarily would involve consultation. So going to that employee and explaining the changes, explaining where there's no opportunity for redeployment, because by definition, standing down means that person can't be gainfully employed. So there are no alternative duties, no roles to be fulfilled at that point in time, which is something that's completely outside of the employer's control. So it's going to them, and then it's notifying them in writing of what it is, and taking it from there.
Okay, thanks. So a lot of employers have long-term casuals on far less than that fortnightly $1,500 JobKeeper payment, and how are they? And now they're expected to obviously pay them that full amount, and obviously that payment they're expecting before they get reimbursed from the government. So people who are not actually currently operating do not have any cash flow. So what are their options there?
So I think Jess mentioned that it's not compulsory. It's not compulsory for employers to apply for the job keeper arrangement or scheme. So they may wish, if depending on what their staff dynamic is and what the status of their employment are, so their employees, so whether they're part-time or casual, long-term casuals, it may be that it's just not financially viable for them to apply for that scheme. So they may do things like, in the case of a part-time employee, offer things like annual leave, access to annual leave entitlements, there's unpaid leave. The Modern Awards have just recently been updated with an option of, it's actually called pandemic leave. So it's 2 weeks of unpaid leave. It's been written into 103 of the 123 Modern Awards. So there are other options there, and not just thinking that this is the only way that I can see someone through here is by having to fork out the money, I guess, initially before they're reimbursed for the government for scheme available.
Thanks.
No worries.
Yeah, so the next few questions I had for you, Cam, was really to do with leave, and a lot of clients are sort of asking, so if you do put someone on unpaid leave, which might be that they're going onto the job seeker payment, does their annual leave and sick leave accrue during that time period? And same if they're on the JobKeeper when they're not actually operating the business, does their leave still accrue at the same rate?
Yeah, so if an employee is stood down, so effectively they are put in a position where they're told that indefinitely we can't gainfully employ, using that language again, then their entitlements will accrue. So personal leave and annual leave, and that's something for employees to consider before they enter those schemes, as in we might find ourselves getting through this period within 6 months, but realising that might be for a full-time employee, that might be an additional 2 weeks for that employee or those employees that were stood down for that period of time, an extra 5 days for personal leave. So these things need to be considered and part of the, I guess, all the information that needs to be taken on board before we're standing down employees. Unpaid leave itself, if ordinarily you do not accrue entitlements, but if in the case of a standing down, they would. So, and if an employee is, if there's an arrangement for them to take unpaid leave as part of the different options before employees are stood down or terminated, in the worst case scenarios, then those things really should be, I guess, explained and understood before you enter that arrangement.
Yeah, and then the final thing, which was a bit of a worry, early days, the whole JobKeeper thing might have changed it a bit, but a lot of employers were sort of worried that they're not operating anymore, they've sort of had to shut up shop or temporarily close. Do they then have to say they had 10 employees, pay out their annual leave sort of straight away where they probably don't have the funds to do so? Or can they kind of put that on hold until things are back on track and sort of supplement it through the job seeker or JobKeeper type arrangement?
Yeah. Although it's encouraged, so different sides and different bodies, unions, government, some industry bodies are recommending that paying out some level of entitlements is looked at. It's not compulsory. So for an employer to enter a stand down situation because they can't operate because of the legislation, because of the restrictions, for example, then there's no necessity there to pay out all the entitlements unless there's a specific instrument, so an agreement, an enterprise agreement, or a model award that specifies that has to happen, or a contract. Then as this is, I think, you said off the top, Chris, that it's unprecedented or uncharted waters. There is very rare that you'll find that in an instrument that it will say specifically that an employer in this type of situation would have to pay an employee all of their entitlements before they were stood down.
Yeah, perfect. Now that was it for me. I think Jess might have a couple.
Yeah, so Cam, what is the process if staff are refusing to work due to safety concerns? So we've had a couple of businesses in this position where their staff don't want to work, they're worried about their safety. Is it sick leave, annual, unpaid? What is it?
Great question, really good one. And depending on the circumstances, there are a few options. One thing that an employer probably should consider, or it's worth bringing up at this point, is that an employer's obligations under the work health and safety legislation is that they must provide a safe and healthy workplace for their employees. So if an employee is concerned about their own health and safety, then that obviously comes into play, and an employer needs to take on board things like the social distancing restrictions that before they take action. So when we're thinking about working in close proximity, are we able to provide that and guarantee that, bearing in mind that Victorian or state government has been very clear about what the penalties are, financial, for not being able to uphold those requirements. So going back to the employee, if they're feeling that they're unsafe and unhealthy, or they've had medical advice that they may be, that's really a key point. They've had medical advice that they shouldn't be at work because they've been, say, for example, they've had a relative return from overseas who may have contracted COVID-19, or maybe in the vicinity of someone that has, or been somewhere where it's a hotspot, then they would be able to access the pandemic leave, the unpaid 2 weeks leave. They can also access their entitlements, but that again would be a negotiation between the employer and the employer, not necessarily granted. But again, the one piece of legislation that you probably need to be referring to or understanding is your obligations under the Work Health and Safety Act.
Okay, cool. And because a few people are in this situation right now, when terminating a staff member, what rate of pay do you pay out their leave and notice period if you're paying out the notice period? Is it their base rate of pay or their normal weekly pay, i.e. penalties they get for working on weekends and that sort of thing?
Yeah. So terminating employee, where we refer back to is whatever legislation or whatever framework that is the one that you would refer to for that employment arrangement. So an employment contract, an enterprise agreement, or a modern award. So those things normally would set out what the rate of pay is, what's a normal rate of pay versus, say, an overtime rate, and what the normal earnings would be, and what would be paid out on termination. So, for example, if part of the employment agreement is RDOs, then whatever's accrued as RDOs would ordinarily be paid out. But when it comes to, so it depends on the industry as well, but when it comes to paying out, it would typically be what the normal contracted hours and rate would be for that individual employee.
Okay, cool. Thank you.
Now, thanks for that, Kamala. That's great. So I think, personally got a lot out of that. And then, it's good to have you as a resource, definitely, to help with our clients. I'm sure you've been, like us, very busy over these past 2-3 weeks. So appreciate you taking the time to join us tonight. We really do. Thank you.
Thanks, Chris. Thanks for the opportunity.
Appreciate it. All right, so just to finish off now before we wrap up, as I spoke off the top, this originally probably wasn't going to be a section that we had in the slides, but we do think it's an important thing to be aware of and sort of start opening up those discussions with, like Jess mentioned with the JobKeeper. This is something we probably did hope there was a bit more clarification on by this point in time. It's something that's been mentioned at a lot of press conferences, but again, it's one of those things like Scott Morrison asking us to go and ask the bank for money. He's asked us to go and talk to the landlord about the tenancy. So what we've tried to do here is just really draft up a letter for clients that might just be uncertain about how they can go about approaching the landlord, and just give them something practical that they can edit themselves and really open up those discussions. So I'll just try to get this on the screen now. And look, it's pretty basic, but it's just sort of something formal that you can give the landlord. If you are, particularly, I guess, retail type of clients that have had to temporarily close, that the rent can be quite high in those locations, and it would be great. Hopefully the landlord's obviously getting support on their side of things, but just coming to an agreement. So what we've drafted up is, if you have been fully shut down, it's just saying, as a result, our revenue's now zero. The speed that this has all happened, you haven't had the chance to sort of build up those cash reserves. You've obviously taken the steps that are necessary to try to cut staff back, apply for these subsidies, but obviously reducing your overheads is another big thing that's hopefully going to mean when you come out the other side, you've got a chance to bounce back and become profitable quite quickly. So again, this is all edited. Happy to send it through to anyone who wants more information on this. Yeah, please reach out, email me direct, and I'll get this straight through to you so you can edit it and use it. Yeah, if you are in that situation. So, like everything, really during this crisis, it's a less than desirable situation, but I do think the tenants and the landlords do have to come together, come to some sort of reasonable arrangement and try to move forward out the other side together with a strong working relationship. It's not about winning these situations at all. It's just about getting through and surviving, as we've mentioned a few times off the top. So that was all for tonight that we had. I think we're nearly right on the hour, which is great. So we did just want to thank you again for giving up your time tonight. We really hope this webinar was of some benefit. I've listed the 4 of us up there and our email addresses. If you do want to contact us direct, please don't hesitate to do so. I actually noticed my video name's Scott CA, so my name is actually Chris Scott, so I probably should have done that off the top. I didn't realise yet. My video is listed like that. So yeah, we do really thank you again for coming out or watching us tonight. It's an incredibly stressful time for everyone, but yeah, we just hope you're taking care, staying safe. Obviously, family is the most important thing at this time, and if we can lift the burden on any of the business stresses, please reach out, because that's what we're here for during this time. So thanks again, appreciate it. Thank you. Bye.
Thanks, everyone.
Bye. Thank you.
Thanks for your time. Bye-bye.